That's what the pullback people say, 10 or 15% is on the cards, and you're saying this could be the pointer that October could be the month.
Correct. I mean, that would be a benign scenario, Peter. Last time the conversation we had was an inverse head and shoulders, where we've broken out of a neckline. We've still broken out of that neckline. We haven't really retested that neckline.
Okay.
Maybe that's what we're in for.
Okay. When Chinese people get scared, they go for gold. I've known you a long time. You're a gold expert as well. What do you see happening for gold? I think we've got a chart for that as well, haven't we?
Yeah, we do.
Yeah.
Basically, it has broken out, and we're waiting for a little bit of a pullback at the moment. It's currently sitting around about 988. There is support around about the 950 mark. This is in US dollars.
Yeah.
There's a support around 950 mark, at which if we pull back to there, we could very easily take off again, and there'd be not much damage done to the chart. And that breakout basically would mean that there's a good 20% rise in store.
Okay, so where do you, for those people who have missed the fact that it shot over 1,000, what do you think is going to happen over the next, say, 2 or 3 months on gold?
2 or 3 months.
Oh, yeah, you set the time period. For people who played the gold market, you know, there are different time frames that are relevant. Yeah. Where do you think we're going?
Time frame's always difficult, but I think that we're definitely in for a consolidation. We're in for a little bit more of a pullback. Yeah. So after we get that pullback, I would imagine that if everything were to go to plan, the gold price would continue to rise. That is in line with the US printing of money. That I mean, they're not going to be able to withdraw that as quickly as they like, and that in itself will keep a lid on the US dollar. Yeah.
And so you're thinking that a lot of this gold price rise is because the value of the US dollar is diminishing because they're creating so much debt to stimulate the US economy, and so Chinese and other investors are saying, well, gold is a much better commodity in this time frame.
That's right, and not just gold, but I suppose, you know, the whole of Australia is a commodity play, and in that regard, that's why the Aussie dollar has been doing well as well.
Do you think Asian investors are also looking at Australia as a way of playing China?
Well, I think it's a safe way to play China in a way. I mean, when it's gone up 108%, at what point do you actually buy in? You know, it does 30% in a month. You go, oh gee, you want to jump into that? Yeah. You know, it does 50% in 5 months. Well, you want to jump into that? Do you want to jump into that then? And so the question has to beg: how much of this is real? How much of this is just stimulus and you know, to get us over the hump of all the fear that we had in the last couple of years, so that everyone can feel confident again. But in this process, as Professor Keane would say, you know, have we morphed into something else? And this is one of the concerns.
I always say no when he asks those scary questions. Now, we've got a viewer question, Lance, for you, because you're here, and this seemed right up your alley. It says, this one comes from Stephen Perth, who's been researching managed funds. And he notes that the Australian equity funds have recovered far quicker than the global funds. Steve believes the ASX will contract by maybe 10% over the next 2 months, and he wants to know whether the level of recovery is likely to be stronger in the managed funds which have exposure to global equities and listed property trusts.
Well, that's a pretty long question.
It's a tough question, isn't it, as well?
Well, I think time doesn't really quite permit us to go through all of that. I guess
what he's basically saying, do you think the global scene has more recovery potential or local managed funds?
Well, I think Australia is actually sitting very well. I mean, I think we all know that, really. I mean, the US dollar has got a limit as to how strong it can get over the next few years as the US tries to recover. So therefore, the Australian dollar and the commodities that we hold here will go up. Hence, gold is a good play. In terms of a pullback, he mentioned a 10% pullback. You know, I think he was talking about wanting to leverage in to something. I think it would be wise to wait a little bit. I think the 10% pullback, we're probably going to get a pullback at some point. The level to watch out, I think, in the US is, I mentioned that 961 on the technical, on the technical level. We would ideally hold that level. China, as you say, you don't want. I haven't double-checked those levels, but you wouldn't want it to fall by, you wouldn't want it to set any new lows, and you wouldn't want it to have the massive volatility to continue, though. But I think that's going to continue.
All right, Lance. It's a tough question. You had a good crack at it, but the pullback is on the cards. And Lance, when it happens, we'll get you in. We'll talk about that.
Thanks, Peter.
Cheers, mate.